Okay, so welcome to another weekly update with Brent and Lee. Usually it's Wednesdays, but this week we're on Thursday. So if you're joining us today, thank you for joining us. If this is the first time you've been to my channel, my name is Lee Brickey, and here we talk about everything real estate in Palm Beach County and the Treasure Coast. And we're joined by our good friend again this week, Brent Starts from Unitas Lending. How you doing tonight, Brent?
Doing great, Lee. How are you?
I'm doing great.
Good.
So tonight we're talking about we're going to give you a market update towards the end of the video today. And then we're going to talk about mortgages, what's happening with the Fed, rates, what's going on with some FHA changes that are coming, which is going to help a lot of people right now buy houses. I think we can get some FHA deals done here with the market shifting a tad, but we're going to go over what's actually happened with the Florida real estate market. As you saw in the thumbnail, it seems like the Florida real estate market, Brent, is unbreakable. Like it's insulated for sure, because when I show these numbers for June, it was shocking to me. We're going to go over what's the real estate market looks like in the last 7 days, what I look at every single day. If before we get started, if this is the first time you've been to our channel, go ahead and slap that subscribe button and ring that notification bell so you don't miss any of our real estate tips and tours. Really appreciate it. And if you like this video, then after the show, like this video, because we appreciate that too. And come with all your comments and questions, and we'll get those answered also. So hi, Jimmy. Jimmy is on tonight.
Awesome.
Yeah. So anyways, to get started, let's talk a little bit about, Brent, what's going on with big thing I get we've been getting this week is a lot of questions on new construction financing. Especially I had another question this week about VA, guys buying VA and new construction, and wondering how that's going to work for him, how far he can lock his loan, if that helped him so far. So let's talk a little bit about that, because we've been running into that. We just had a situation with GL Homes where they didn't want to take a VA loan. So again, good reason to have a real estate agent on your side when you're doing this. Not just saying that because I'm a real estate agent, but when you're buying new construction right now, you know, it's good to have somebody on your side to help hold your hand, walk you through things, because, you know, the agents on the other side, they're great and they're trying to sell houses, but you're also dealing with mortgages and corporate and everything. So, and these mortgage companies are direct lenders. They don't work like mortgage brokers do. So let's talk a little bit about buying new construction on the VA side and on regular conventional FHA, everything, Brent, and why it's a better option to at least back up your loan with a mortgage broker like yourself.
Absolutely. Well, you know, we've had a couple, this last week, we were able to close up a loan. It was a VA borrower, and it's a wonderful loan. It's a great benefit that the country offers its veterans, which I think, you know, I feel really strongly about. Got the flag behind me. Right. And I think, you know, we have men that have served, men and women have served our country, and it's a wonderful benefit that's offered. It's a guarantee, essentially. It's insured by the VA, the Veterans Administration. And so there's no mortgage insurance. It's as little as $0 down as far as a down payment. And so there's some credits that we can take care of there as well. And it's a solid loan. Well, sometimes, you know, builders or sometimes, you know, sellers don't like to see it because they think it's you know, there's no down payment, that type of thing, and it spooks them. But, you know, are they really qualified? And I can assure them that they're very qualified. And so with the borrower's permission, I can share some specifics, you know, credit score and assets and things like that. It's really just a benefit that the country offers our veterans, which is do them. And so we push pretty hard for our vets. Absolutely.
Right. Right.
Yeah, well, what you asked, Lee, is really the long-term lock
The
too.
long-term lock. Yeah. Talk about the long-term lock, because these guys are, in these new construction, they're offering all these locks and these long-term locks, but there's a lot of fine print there and you're paying for it. So,
Sure can. I mean, one was so far out of the market. We can lock right at this point. We're locking 6 months out. We can do that, and there's a cost because the lender takes that risk of rate risk, right? So if rates go up drastically, they could lend those funds out, for a higher rate. So the rate risk shifts to the lender at that time. So I tell people, just cover your bases. The market was moving so quickly several months ago. We locked in a loan a little over 3 months ago, and that loan closed this week. That it's way lower, and we're closing one next week. It's
right.
about a full point or more below the current market. And if rates do improve, which is a possibility, we're going into possibly a recession. That's not official yet, but all indicators point that we might be headed that direction. And if that's the case, rates will start to lighten up, and then we can always do a renegotiation of the rate too. And a lot of people don't realize that's available. Certainly
But
we
it's
can do
not
that.
available with the direct lenders. It's
There
not
could,
available with most of these. I mean, if you find one, great, but we haven't run across it yet where these builders, lenders will actually give you the lower rate. You're gonna get stuck with that rate,
yeah.
and the
Well, the
rate's
ones that
gonna
we
be
look.
higher than what it is now. Explain
Mhm.
that.
Yeah, and one of the situations we looked at specifically, he was going to pay $10,000 or $12,000 for the lock, and so that was pretty pricey, and the rate was in the low sixes. And I advised him. I said, I'd hold tight, wait until you're inside the 6 months, and then see where we're at, because right now the bond, the Fannie Mae bond, is how mortgages are purchased. I mean, your loan is investment for an investor. In other words, you're paying a rate of return to the lender, and so that's how it works. And so if you're locking in for the long haul, you've got it covered both ways. In other words, we can lock in if rates improve. Like I say, we can renegotiate the rate down if that's the case. You shouldn't be paying an exorbitant amount for anything over 6 months, certainly, or even less than 6 months. We're seeing some crazy programs offered. Cover your bases, but if the market improves, you can always float down or do a renegotiation.
Right, right. So that's the benefit. So if you're hearing Brent, the benefit of working with a mortgage broker, backing up your loan, if you're working with the builder, is to back up your loan with a mortgage broker like Brent, where you can lock it 6 months out. It's not going to be a huge charge. If there is a charge, it's, at the most, it's a couple of grand, right, Brent?
Right. That's
Right.
what we're
And
looking at. Mhm.
right. But the beauty of being with a mortgage broker over the direct lender, which is the financing for the builder, is that if the rates improve, then you're going to get the lower rate. And that's something you can ask the builder's agent, hey, listen, if I
Yeah.
lock this and I get rates improve, are you going to give me the better rate? If they say no, then you've got your answer. You want to deal with that. Also, you know, I'm just going to tell you, we've been having issues closing with, some of these new construction where, especially folks coming from New York, New Jersey, where there's lawyers involved and you need paperwork at time of closing, and it pushes the closing a couple hours. And so, you want to be working, make sure if you're having issues on the front end, getting paperwork through and them, accepting it and making sure they're communicating with you properly. If that's not happening, then you definitely want to be looking outside, because you want to make sure you're closing and that everything is tightened up by closing day, because we're seeing that too, where a lot of these lenders for these builders they don't have everything tightened down, and you're sitting at the closing table and they're asking for, closing disclosures and things like that you got to call an attorney in New York and get that paperwork for them, or that, you send it to them, find it in your email. I mean, it's just not something you want to be doing.
Mhm.
And then, we've seen clients where they're not going to be able to close because rates have gone up. If they didn't back up the loan, we've seen clients where they've had to come out of pocket, $25,000, $50,000 more to close because they're not accepting certain income because they might have gotten a raise or whatever the case may be. These are all questions that you need to be aware of if you're financing on new construction, because they do not have to give you your money back. The contract is in their favor 100%, and they don't have to give you your money back. Now, some of them would, just to keep out of trouble, but you don't want to get in that situation. You want to close on your house, especially if you sold your other house. So that's really something you want to do. So,
Yeah. We've closed a couple loans in the last month where if we didn't lock it, they wouldn't qualify any longer. You know what I mean? If we didn't lock it way in advance. And so,
right.
covering your tracks is good. You're
Here,
covering all
Brent,
bases.
here's something for you.
Oh, good. Okay, good. Yeah.
Yeah, have your mom reach out to Brent and just have a conversation. It doesn't hurt to talk to him, and he'll kind of lead her in the right direction, because this is a big deal right now. Rates swinging around. I mean, if she starts her, here's a prime example. She starts the process, and 8 months, 10 months from now, she's closing on the house. Even 12 months from now, and rates have improved into the fours. She wants to be able to get that rate.
Right.
And especially with VA, because VA is going to be less than conventional.
Yeah, it's less than conventional. There's no MI, and so there's definitely some wonderful advantages to it. But I would put your mind a little bit at ease. It looks like the bond is trading in a straight range right now, in a sideways pattern, and so it doesn't look like rates are going to go up drastically. Certainly they could, with a inflation and with the potential recession. I don't think they're going to go up radically. I think what we've seen so far, we've seen the majority of the rate hikes. In other words, they've already played out in the mortgage market. But I think, if you're starting August 1st, when you get within that 6-month range, you need to lock it down to have that security that, worst case, you still have a transaction that's going to happen. And if it improves, then we can see what we can do. What options might be available. But right now, I'd say that if I were to be asked where rates are going to be, I think first quarter of 2023, it's potentially going to be lower than we might be seeing right now. So I wouldn't be too concerned, but certainly you're right to be asking these questions because you want to make sure you're good either way. No one knows
Right.
for sure, but that's generally what's going on.
All right. So I'm going to share my screen with you. It's something I do look at every day. I'm just going to give you a quick snap of the last 7 days of what's happening in South Florida. I see there's a few people on, so tell us where you're coming in from too. We'd like to know where you're listening from and watching. That's really cool. So shoot a comment, tell us where you're watching from, and I'm going to share my screen, Brent, and talk a little bit about this. So I look at this every day, and I always look at the 7-day update, because this gives us a good idea of where the market is in South Florida. Because people keep asking, you see the market thinking it's going to. A lot of people are seeing housing drop, right? And those are just overpriced homes, and this really spells it out for you. My MLS is kind of weird, so when you see under contract here and then pending, they're basically the same thing. I mean, it means the house is under contract. It's just another way of saying it's under contract. So when we see the last 7 days, we have 2,900, little over 2,900 homes active, right, at the average price of almost 800,000. Now, this is from St. Lucie County all the way to Dade County, all of South Florida. And then you can see here we have 1,228 active homes under contract, and then 1,919 pending. So you add that on, we're sitting at about 2,000 homes pending. So we only have 900 homes. This number here in these two numbers, these two numbers need to be, this number here needs to be 3 times what these two numbers are So we need to have 3 times 2,000 homes of active listings to be in a balanced market. So, and you can see some have been withdrawn. You can see how many closed. We had 1,217 closes. We had 170 canceled. So they decided not to sell their home. But this is, we are still in a very, very strong seller's market in Florida right now. And this shows you that is where we're at. So every week we'll show you this so you can stay up to speed of what's happening in South Florida. But this is all of South Florida right now, where my MLS goes.
Well, I can tell you in the front lines here, the demand hasn't curbed at all. There's still tremendous demand. What we're seeing, frankly, for that buyer that's 350 to 550 purchase price, it's affordability index is what we're seeing. And because of the migration pattern, so many people moving from other places, selling their homes and moving here, the demand I see is very strong.
Right.
Hasn't changed.
Well, 560 people a day. That's what they're saying.
Mm-hmm. I think it's driver's licenses. So
right.
that represents
driver's
probably
license.
Probably families. Yeah.
Yeah. So that's more people moving here. So talk a little bit about this. This article came out this week from NAR. Good renters may qualify for mortgages on Sunday, July 10th, which is already passed. Renters who pay on time can get their home buying boost even if they have thin credit scores, a big benefit for first-time buyers in underserved communities. So talk about this, Brent.
Oh, it's a great thing. There's basically a hole in the credit process. People that pay their rent on time, Lee, it's really in previous times that there was no benefit to it, from a credit perspective. In other words, it wasn't reporting to the credit bureaus; they weren't getting credit for it, and so borrowers with a thin profile, in other words, they don't have many lines of credit. It was a game. They had to go out and apply for cards, and then they then charge them up and pay them off. So it was kind of like we would talk to people how to kind of game the system, if you will. What I mean? Because it's the system we're dealt with. It's the game we're in, so we might as well play it. And so this will really help because it's a large installment loan. So it feels like a mortgage. And so the credit bureaus in this program, what they're going to do is Freddie Mac specifically, they're going to look at 12 months bank statements, make sure that that's paid on time. If you have a situation where you're paying with money orders or cash or to a family member, something like that, there is a VOR option, which is a verification of rent option. You will probably need a manual underwrite, is what it's called. So you'd have to work with a lender that accepts a manual underwrite. In other words, it's not just a computer profile they're looking at. They're actually an underwriter's putting their eyes on it and looking at the viability of the loan and making a decision manually.
Which you've done a ton of.
That's right.
A ton of that stuff. Yeah.
We do a lot of that stuff.
Before craziness and we were doing FHA and VA, we did a ton of that stuff.
Sure have. And
I think, the market's still moving, but I think, we can get some FHA deals through here soon and start helping some people, that normally weren't able to buy during the craziness are going to be able to have an opportunity again because couldn't get an FHA loan through. VA loans were hard to get through real estate agents.
Right.
And here's another one. FHA will ignore COVID era unemployment lapse. So I think this is a good one too, because, I really don't think that was fair. They shut the whole country down. People couldn't go to work. And then they, some people had a little bit of time, had to switch jobs and find different places to go to work. So I think this is another one where, they're going to just ignore it now.
Right. Not due to anything and, on their part, it's hard to imagine them penalizing it, but this program wasn't in existence. And so, when you look at stability of income, so in other words, it's called continuity of employment. They're looking for stability is what they're looking for. And rightfully so. From a lender's perspective, they like to see that you can hold down a job. And so a lot of folks were, having restaurants close and then open and many careers were impacted by this. And so what they're going to do is, again, it's going to be some manual underwriting, but what we're going to look at is are they in the same line of work? Is it comparable, and is it stable now? So a letter of explanation, of what happened is going to be required. But I'm really excited to see this program come into play. And then we're actually taking applications with this now, but we have to order the case number after September 5th. So if we, in other words, September 5th, we can actually officially submit the loan with that new case number. And if it's September 5th or after, we'll be able to help people that were impacted by COVID.
Yeah, which was a lot of people.
A lot of people.
So this is why you want to buy a house.
Right.
And not rent.
Yeah.
So if you can afford to buy a house, I was just talking to getting my blood drawn the other day, and I was talking to the young lady drawing my blood, and she's like, boy, my rent's getting so expensive. We just need to buy a house. I said, you absolutely do. And I'm not just saying that because I'm a real estate agent. So the hardest places to rent are Florida and the Northeast. Right now, the top 3 cities are in Florida right now for highest rent. Because and then this is, we showed a screen last week. If you didn't see it, go look at our video last week. But we showed a map of Florida and where the most investment real estate is happening, and that's in that area I just showed you of South Florida, from St. Lucie County to Dade County. Is you're seeing a huge amount of investment real estate, and the Jacksonville area. Also, everywhere you're seeing, high-end homes. The hedge funds are coming in, and business going into that area. The hedge funds are coming in and they're buying up as much as they can. And that's tightening the market more. Some HOAs are combating that by saying, look, we're not going to sell. You can't sell your house for a year after buying it, which is a good thing. It keeps the investors out. But, they're buying everything that they can where they don't have that situation. So that's going to keep tightening the market, Brent.
It is, absolutely, Lee. It's just too many people, not enough homes. It's a housing crisis in Florida because so many people are moving here. Like with demand for both, rentals and homes,
Right.
owner occupied, because
so
that's going to force the rents up. Yeah.
Well, this is it. This is a CoreLogic report that came out, and it's talking about millennials. The rising prices are more demand than supply. And they did a study, and if you look here, it says they found that just to balance the market in the United States, this is crazy. This is the entire United States. So Florida is the #1 market for people to move to. Texas is #2. So those 2 states are getting, this would have the most of this. But they say that just to balance the market in the United States, through this study, they found they need a 30% increase in monthly number of homes coming on the market, and a 300% to absorb the surge of new construction. It's crazy.
It is.
And a lot of this is millennials coming into the marketplace, Brent, because of, I think, jobs. We went through COVID, and people change jobs, companies change the way that they're doing things. I have a lot of my friends are now working from home. We're seeing clients coming in that we're selling homes to. They're coming in and they're buying homes here in Florida because they can work from home. So I think we're going to see more and more of this. It's just going to keep the market continuing to tighten it up.
Yeah, I see remote work is probably 3 times what we saw 3 years ago.
Right.
I mean, it's a whole different ball game. Millennials love that. I mean, and if if your company is located in the north or northeast, and you can live in Florida, I mean, with no income tax and no commute, and it's pretty attractive.
Right. Absolutely. T-Mobile has allowed a lot of their employees to go home. We've sold a house to a client that she works for T-Mobile. Our buddy Chris, he's working from home now. He used to have to drive to Fort Lauderdale every day. No longer has to do that. He only has to drive when he has to go to a job. So, it's really saving, especially with gas prices right now. They're saving money. They're staying at home. They have kids. That's a great thing because they're able to go pick their kids up and have more family time. And, when you don't have to, go to an office every day, it saves on everything, everything, food, gas, clothing, everything.
Yeah, with the cost of gas, I mean, I actually know people that are moving to be closer if they do have to go into work. I know a mechanic that he's looking for a job. He was driving, almost 40 minutes each way to work, and he just the cost of gas. He goes, I just got to find something closer, and he did right away because the jobs are plentiful. You know what I mean? And so making a change that way. Yeah.
All right, so let's look at the numbers and see what is going on in the 3 counties that we work in. 3 cities that we work in, basically, or 3 counties. So here it is. Homes available in Port St. Lucie. So we had 1,442 homes on the available for sale in May. That has increased a little bit to 1,479. But you would think that it's summertime and there would be, more homes on the market because there's less buyers. But this is showing that summer now is continuing to move forward. I mean, the increase in homes, I think, is the increase in rates. So, the amount of homes available for sale from May to June has increased. The numbers of homes sold decreased a little bit. You can see there, almost 100 homes sold. Days on the market increased from 12 to 14 days, which isn't a lot. This is the thing I always like to look at. Look, how many homes are selling for over asking? Because that means the market's still going up. Prices are still rising. When homes are selling for over asking, prices are still rising. So 48% of all the homes sold in Port St. Lucie in June were sold for over asking. 95% were sold under asking, but that's because, again, people are doing their due diligence now. One of the things is we're seeing more homes come back on the market than we saw previously over the last couple of years. We're seeing more homes now coming back on the market. I think 3 reasons on that. Number one, rates have gone up, right, Brent? That's affected the amount, right, of home people that can buy. The second is definitely people are doing their due diligence. They're now doing their due diligence, and so they weren't doing that before. They weren't doing appraisals. They weren't doing inspections, which I always told my clients, let's do an inspection. I mean, we can bounce the appraisal with appraisal waiver, but there's no way we should do it with the inspection. And always do an inspection on a house before you buy it. Always, no matter what.
Absolutely.
And then the third reason, I think, people are getting in these houses and they're in these bidding wars and they're seeing something else on the market, or they're getting, buyer's remorse and they're walking away in their inspection period. I mean, that's a big one right now. People are walking away during the inspection period just because they can. Because if you don't know this and you're buying a house, you can walk away during the inspection period for any reason. You don't have to have a reason. You could just say, hey, we decided not to buy the house. So, and then you saw 494, so 26, so it's exactly the same. 26 homes were sold under asking, 26 homes were sold at asking. So, the market in Port St. Lucie is still strong. It's moving. It's not as fast as it was, but, homes are selling and they're still selling for above asking if they're nice. Really quick on that one, and I say this all the time. Don't overprice your home. If you're a seller, don't overprice your home. Price your home at market or a little under market so that you can get multiple offers on it.
Right.
If you're over market, you're not going to get multiple offers. You're going to end up dropping the price. And, we have a client, Gerard, he actually he might be on now, but Gerard did that in New York. They put their house up. It was, over market price. It sat there. People viewed it, but they didn't get any offers. They dropped it to the market price, and they ended up selling it for more. I think he got 20 or 30,000. Might have been even more than that over the asking, because it ended up with a bidding war. So there is still bidding wars. Trust me when I tell you that. We're experiencing them every week. So this is Martin County, which in May you had 696 sales. Homes for sale. June, that dropped a little bit, and then in number of homes sold dropped also, and then days on the market dropped also. So, but here you can see 25% of the homes sold for over asking, 67 sold for under asking, 44% sold for under asking, and 49 sold at the asking price. So Martin County is kind of its own little deal. That Martin County is Stewart, Jensen Beach, and Hope Sound. And then if we look at Palm Beach County, we had 9,800 homes in May. We had 10,000 in June. So our inventory went up a little bit, but again, you can see inventory is not going up that much. And then number of homes sold decreased, and days, but if you look, days on the market are only 18 days on the market. And again, we're running into the same situation over here. 36% of the homes sold for over asking, meaning that the market's still moving upwards in upwards motion. People are dropping prices where they're overpriced, and homes are selling at asking where you're coming. These are usually homes that, they might need a little bit of work. Anytime you see homes selling for over asking, the home is nice. I will tell you that. So if you're trying to find, something that's in good shape, it's been upgraded, has a pool, especially, you're gonna need a good real estate agent on your side to get that offer accepted, because you're gonna run into these bidding wars. So
yeah, days on market used to be measured months. Right. Now we're talking days.
Exactly.
It's a different
We used
deal.
to say in Jupiter here, if we didn't sell the house in 30 days, there was something wrong with it. Now, if you don't sell it in a week, there's something wrong with it.
Yeah.
When a year, last year, if you didn't sell it in 3 days, there was something wrong with it.
Right.
Right. So anyways, anything else you want to share, Brent?
I think it merits a bit of a conversation. We had this consumer price index come out yesterday, and the producer price index come out today. And what those are, it's inflation, and that's really what's driving interest rates. And so, when the CPI came out, the consumer price index, that's what you pay for, retail goods, and the overall number is, includes everything. And their core excludes core CPI excludes gas, fuel, and food. So what happened on Wednesday? We had the CPI came out month over month. They were expecting 1.1% increase in June, and it came in at 1.3%. So you're looking at just hair over 13% annualized versus what annualized, if it stayed the same, you're looking over 15%. If what happened in the 1 month happens over the next year. Fortunately, previous months were lower than that, so the annualized CPI came in at 9.1, and that was a hot number. They were expecting it to drop a little bit, and so rates popped up a little bit yesterday. Due to that, because everyone was expecting it to come in high, but it came in a little higher, and I think a lot of people were looking for inflation to top out, if you will. And so immediately the likelihood of a full point increase in the Fed funds rate here on July 27th, the next meeting, that it went to like in the 70-80% range as far as likelihood, as as far as hedging and all that stuff. They can actually calculate what the percentage chance of a 1% increase versus a 0.75%. And so right now, there's going to be a 0.75% increase in the Fed funds rate. I just want to let people know, if they're in the process of a mortgage, that type of thing, that's already baked into the mortgage rates. That's already, we know that's going to happen. It's either going to be 0.75 or a full point. And so, to give you an idea, it's been 40 years, 1982, last time the Fed did a full point hike. And so they're serious about, raising interest rates and cooling the economy a little bit and getting inflation under control. But the 10-year bond is hovering right around 3% still. So the market's saying, hey, yeah, you've done that. We built it into our rate sheets already as far as mortgages are concerned. But you will see things like credit card rates going up. Anything tied to prime will go up in lockstep with it. So, if you're tied to anything in prime rate, you have a second mortgage, a HELOC, if it's tied to the prime, you're going to see an increase. So I just want to let people, know that, and that's something you want to be aware of. What's your, if you have anything adjustable, what's it tied to? And if you're in the process of getting a mortgage, it's already baked in. So don't get too freaked out by it when you hear it in a few weeks here.
Right.
It's gonna go up, and it's already baked in. The producer price index, that's wholesale raw materials. The expected number for June was 0.8%. It came in at 1.1. So again, it came in a little hotter. And so usually the raw materials are used to make retail goods, right? So you usually see a curb in the inflation numbers and raw materials first, and that's why the markets responded like they did, and rates popped a little bit yesterday and today. And we look for that to kind of start to level out a little bit here. But so we typically lock ahead of those big news stories.
Right.
But I just wanted to let people know, if they're in the process of mortgage, it's baked in, and not to get too fearful. They're expecting that 0.75 hit in July 27th, I believe, is the next meeting.
Right. We have seen gas prices come down just a little bit, like
Right.
40%, I think 40 cents, right? And I
Right.
was listening today to the market news, and restaurants have seen food prices coming down a little bit, but we're not seeing that in the grocery store because of diesel prices being so high. But
Right.
I think, Brent, that food prices, as far as restaurants coming down and gas prices coming down in the summertime, which never happens, I think people are staying at home.
Yeah. Yeah, I think so
I mean,
too.
it's so
People are.
expensive for them to go out. I really honestly think that's people staying at home.
Yeah, people are adjusting their lifestyle certainly to it. It's impacting a lot of people. It's a difficult time for people, and I think we're going through a tough season. The next 3 to 4 months are going to be difficult. Until it starts to turn the corner. Fuel is a big part of that. So, and it's unfortunate because that trickles through the whole economy. Everything has to be shipped, right? And
Right.
so it affects
Well,
everything.
we're still having supply chain issues.
Right.
Builders are still having a hard time getting their building materials. I was talking to a guy who rehabbed a house in Boca the other day. We were showing a house, and he said it just took him forever to rehab that house. So if you're thinking about buying a house and rehabbing it, it might want to change your mind, because you're fighting these builders, and these builders are sucking up all the supplies they can get. And they have the direct run to it because they're buying so much more than you can. So I don't think it's really the time to be, rehabbing your home right now, or buying a house to rehab and flip or rent. Would suggest to buy something if you're on the investment side that is ready to go.
I agree.
Because as long as we're having these high gas prices, which that's not going to change for a long time, I think.
That really hurts the middle class and lower middle class as well.
It's terrible.
It's a difficult
I mean, you're
situation.
hearing it everywhere. And with high prices in homes right now in Florida, and we want you to know that we have empathy, and we care about you guys that are out there struggling, and it because we're in the same boat. We have families and children and kids in college, and we have to pay our bills and buy our gas, and I'm on the road all the time. I thank God I bought a hybrid when cars were still cheap, and
Yeah.
But you know, everything's more expensive and it's tough out there right now. So we're going to wrap it up. We have one more comment. Let's see here. Yes, Lee, this is Gerard. Yeah, they received 50,000 over their asking price. They close in July 20th. So there you go. He's sold up in New York, heading for Florida. So we're getting another New Yorker.
That's right.
He's a good one too. I like that.
Yeah.
My
Yeah,
buddy.
we had three closings this week, and I'll tell you what, it's a reminder when we sit down with these folks. We have the best clients ever, Lee. I mean,
We
really,
do.
we do.
We do.
I
Yeah,
don't
great
know.
clients.
Yeah, people are worried about, hey, I don't want these people come down and screwing up Florida. And I got to tell
No,
you,
I
man, the ones
promise
that are
you, the
coming
ones
down
we're putting in houses, I keep telling everybody, keeps telling me that, and I keep saying, hey, the ones
they're
we're
great.
putting in houses are awesome. I'm glad they're coming down. They're great people, wonderful people. They're coming from all over the place, and
every single one. Think about it.
Yeah,
every single one is coming down. It's come down.
We don't have a bad one.
No. Police officers.
If you're a weirdo, don't call us.
That's right.
Unless you're like weirdo, like we're weirdo. You can be a little weirdo because we're little weirdos, but
the stuff on your wall back there, Lee,
don't call us.
Like you got Star Trek stuff hanging from your ceiling. You're a little weird. It's all right.
Yeah. My wife, you know, we've been doing real estate for 8 years, and we built the YouTube channel, and we started getting all the business from YouTube, and so she'd been teaching and wasn't really running real estate, and she started going out and running real estate, and she's like, gosh, these people are so friendly. You just love them. They're just wonderful. And everybody loves her anyways, because she's the best. So she's pretty and sweet. So
got yourself a fine there,
ugly
Lee.
and sour.
There is a God.
You know?
No, but she's wonderful.
But anyway, so we're going to wrap it up tonight. But thanks for joining us. We'll be here next Wednesday. We won't be here on Thursday. I had some I'm busy. We're busy. Things get in the way. So sometimes we have to move it around, but promise we'll all do it. I've got some new content coming out, so look out for that. I'm working on that right now. And I appreciate everyone joining in again tonight. Brent and I really appreciate it. Leave your comments if you did not get on to this video and you're watching it afterwards. Leave your comments and we'll answer them. I send a lot of these comments to Brent. If you have questions, any questions about loans, anything that you're worried about, please reach out to Brent. If you're looking to purchase anywhere in Palm Beach County or the Treasure Coast, don't forget I'm a full-time real estate agent and I'm working all the time, and we would love to help you as long as you're nice. That's all that matters. You can be a weirdo, just be nice.
Qualifier.
Yeah. And then also, again, if you haven't subscribed, please subscribe to the channel. And so slap that subscribe button, ring that notification bell. And then when you see this video, like it, because that helps us out. And listen, be kind to each other. I tell people all the time, you know, I know it's rough out there sometimes on the roads. People are stressed out, and, you know, if you see somebody at the gas station and they're pumping $1 or $5, fill a tank up, you know, bless somebody. So be kind to each other, and we will see you next week. And thanks again for joining us.